Hello from Germany. I send warm regards. Unfortunately, I cannot be with you this time, but I'm happy to be able to share our views about the global market, about the global supply, demand and price outlook for the new season. I have to be selective, limited time allocated for me, but I invite you to contact me to pose your questions for all those issues I have not covered, and also for those I covered where you want to discuss with me the outlook. Well, most of you know me and know Oil World, founded back in 1958, a family company, no outside investments. We are independent, we are not involved in trading, and we provide unbiased information on a monthly world balances, quarterly, annual, with our daily, weekly and monthly reports. We want to be your provider for global analysis, and we invite you to contact us directly and not cover your requirements by third parties. Edible oil prices have been unusually strong. They more than doubled since May last year. The oil world price indices clearly show edible oils much firmer than meals since January this year, continuing to stay high over the past couple of weeks at around 180, which is 80% above the 5-year average for this index, which is weighted by the portion of the individual edible oils in world trade. Soybean oil prices unusually high. They have been above 1,050 for the past 10 months. And even yesterday, prices in Argentina were at $1,340, very close to the multi-year highs reached earlier this year, far above the past 3 years. The same is true for palm oil, as we can see here. I've taken Indonesian crude palm oil. A very similar graph, of course, is for RBD Malaysian palm oil. Yesterday, Indonesian palm oil was quoted at $1,240, still unusually high and not far from the 10-year highs registered earlier this year. Now, what is likely to occur? Reactions have already taken place. Due to the high prices, consumers have cut back usage. We see some major changes in several importing countries, particularly in the developing world, where edible oil consumption is declining as a result of the high prices. This trend is currently continuing. India is one example. It's not only pandemic effects, it's also effects of the high prices. Edible oil consumption has declined. And by the way, consumption of oils and fats for biofuel has continued to increase this year. As I will point later on, world consumption has increased, and biodiesel production is rising this year by about 1.5 million tons to a new high. Second response, farmers boosted plantings of oilseeds by 8 million hectares for the new season, for the season 21-22. There have been competition with grains So the oilseed area growth was somewhat curbed in certain countries by expanding plantings of grains and field peas. One example is China, where the soybean area declined and soybean production is down. Another example is India. Another example is Argentina or the US. Competition from grains. At the same time, corn and wheat global balances are relatively tight. For the new season, we estimate world production of 10 oilseeds to rise by 24 million tons. In our opinion, there will be a global production surplus and a recovery of stocks of oilseeds. So we should keep this in mind. There are several uncertainties, but with about normal weather from now on, we should have a global production surplus for all oilseeds combined. This is the total global market. World production 607 million tons, soybeans 62% in the new season, rapeseed, sunflower seed, cottonseed, groundnuts and others following. Almost a doubling of world production during the past 20 years. A very significant increase in consumption has been behind that. Consumption is driving production. Can this trend continue? Probably not. For soybeans, very clearly, soybeans is the growth leader. Global dependence on soybeans is rising. World production up 17 million tons in the new season. We expect world stocks of soybeans to increase, mainly in the US and South America. But there are still many uncertainties: weather, farmer selling, effects of COVID, purchases of the key importing countries like China. What is China going to do? Very important for price making. Currencies, GDP, energy prices unusually strong at the moment. Coal prices doubled. Crude mineral oil prices at a 3-year high. And very important, what will be the political framework? Are we going to see some political decisions temporarily reducing the biodiesel mandates in the current situation of tight supplies to bring down food inflation? Yeah? So many uncertainties. In soybeans, rapid expansion in South America. Since I started my career in the 70s, South American soybean production was 10 million tons. Well, this is more than 40 years ago. This season, it's going to surpass 200 million tons. The 3 countries alone. Brazil, we think 144 to 145 million tons, 7 to 8 million tons more than a year ago. US, 6 to 7 million tons increase. Argentina, 46, 47, probably this may be a little bit optimistic, probably 45. We have to see. Soybean plantings in Argentina are declining because farmers are shifting to corn. Decline in China. Indian production is also falling short of expectations, quite obviously. Brazil has sharply increased soybean production last year to 137 million tons despite drought. Well, this is the 137 million tons is the crop harvested in January, April 2021. Now, the reason is to be seen in considerably larger plantings than admitted on so-called unregistered land. Some say illegal land, land from clearing of forest. And this land is going to expand rapidly, and therefore This is the reason for the boost in Brazilian production. It's the land bank which is rising so sharply, not so much the yields. So I'm quite confident that we are going to see another significant increase in Brazil, even if weather conditions will not be ideal because of acreage. Soybean prices, soybean futures in Chicago have been on a declining trend in recent weeks because of a slowing down of disposals, declining world trade since June, sluggish meal demand, and prospects of a global production surplus. We have seen some recovery in soybean futures during the past 2 days. We may start this downtrend again in the near to medium term, unless the weather in South America becomes really dry. And there is La Nina, so we have to watch. I'm sorry. World exports declined sharply by 8 to 9 million tons from a year earlier in June, August. A massive decline in world exports. And this was to a very large extent caused by a decline in Chinese imports. China reduced imports very sharply because of the high prices prevailing in May and June. They cut back their purchases and decided to reduce domestic stocks, which had accumulated to record levels. Chinese buying is, in my opinion, likely to pick up. Their forward purchases have been rather small so far, so with prices having declined, we could see a new Chinese buying wave sometime soon. We have to watch that, and this could become an important price-making factor. For soybeans worldwide, we expect exports for the new season 21-22 to rise by 8 million tons. South America alone by 14 to 15 million tons, probably more, and US and Canadian exports decline sharply. And in fact, I would not be surprised if US soybean exports will be even lower than this 55.4 million tons, allowing for some additional recovery of stocks. The world soybean balance is going to be in surplus. Production is going to exceed total consumption, although we are assuming an increase in crushings by worldwide by 10 to 11 million tons. Soybeans are likely to benefit from the shortage in rapeseed and canola to some extent. We also expect a recovery in meal demand, in soya meal demand, and this is likely to be a driver for increasing soybean crushings. Still, there is a high probability that soybean stocks will continue to recover close to 100 million tons at the end of August next year. So, in summary, the outlook for soybeans is for prices to be sideways or lower, probably lower, at least in January, June next year. Soybean oil production is going to rise sharply by 2 million tons with the larger crush, with increases in China, in Argentina, in the US, in Brazil and other countries. We expect only a limited increase in exports of soybean oil and world exports of soybean oil because of the competition with sun oil, because of the competition of palm oil. Most of the soybean oil will be consumed domestically in the US and in China. Yeah. Soybean stocks rising. Stocks usage ratio slightly recovering. Sunflower seed. World production plummeted by 5.3 million tons last season. A substantial recovery by 7 million tons is now likely to occur in the current season, which is raising world crushings and thus export supplies of sun oil and meal. In my opinion, this is a very important changes. Very important changes are ahead for the sunflower complex, and sun oil will have to be priced competitive to regain market share. At the moment, sunflower oil prices are rather firm, I think surprisingly firm, but I don't think that this is going to be sustainable. World production of sunflower oil is going to rise by approximately 3 million tons. 3 million tons of oil, and mainly in Ukraine and Russia and the EU. And exports are rising by 2.8 million tons. And to find a market for this, sun oil has to be price competitive. In India, in China, in Africa, in other countries. To some extent, sun oil will be used in the European Union in the biodiesel sector to replace more expensive rapeseed. This, to some extent, reduces the bearishness of sun, the bullishness of rapeseed oil, but still we expect that sun oil will be one bearish driver in coming months. At the moment, reserved farmer selling and some uncertainty in Russia about the export tax have limited the sunflower crush at the beginning of the season, but this is going to change. The seed will move to the market sooner or later. Probably we see most pressure in sun oil in the last 6 to 8 months of the season. Rapeseed is a different story. Rapeseed canola. Production failure in Canada. The Canadian crop 7 million tons below potential. Our estimate 13.4. It could be 13.0 or less, compared with a potential of 20 million tons. Lower crop in Europe. Below potential production in China. Lower crop in the US. Overall, world rapeseed production falling to a 13-year low of only 62 million tons in the next 12 months. I'm sorry. So this is a bullish outlook. Sun oil has developed price discounts to soya oil and rapeseed oil. We can see this here. Sun oil in red, still at a premium until about June, and then falling to a discount to rapeseed oil. And this is likely to stay. Soybean meal. There is an increasing dependence on soya meal worldwide. Very clearly. Production of other oil meals is rather flat. Increasing dependence on soybean meal. Soybean meal today accounts for approximately 67% of world production. Now, during the past 3 months, I'm very sorry, I really during the past 3 months, world consumption of soya meal has slowed and crushings have fallen below expectations, primarily in China. Slower soybean disposals and larger soybean stocks in the export locations at the end of August this year. But we assume that in the next 12 months, the situation will improve, demand situation will improve. We expect world production of soya meal to rise by more than 8 million tons, with probably 1/3 of this increase in China. For China, we expect a consumption of all oil meals to reach around 100 million tons. There will be reduced supplies of rapeseed meal, but soya meal production and consumption is likely to rise sharply. 77.2 million tons is our forecast, up 3.1 million tons. Now, the pig production in China has slowed down. Low prices and negative margins have reduced the enthusiasm to grow pigs. And this has been reflected in a considerable slowdown of soybean meal consumption in the past 3 months. Now, turning to vegetable oils. Soybean oil has been relatively firmer than soya meal over the past 10 months, but this could change. We see that the soya oil share in Chicago has already dropped over the past 3 weeks. Over the past 3 weeks. Yeah. For the nearest forward position. We consider it likely that the soya oil share will continue to weaken in the course of the current season. For the next 12 months, we forecast world production of 4 vegetable oils to increase by 7.4 million tons. This is going to be the biggest growth in 4 years. For palm, we expect world production to rise by 3.9 million tons, for soybean oil by 2 million tons, for sunflower oil by 3 million tons, and this will be only partly offset by a prospective decline in world production of rapeseed oil by 1.6 million tons. Therefore, following 2 years of a global production deficit and a sharp decline of vegetable oil stocks, the global market is, in my opinion, moving into a production surplus. Based on these forecasts, move into a production surplus in which vegetable oil stocks are likely to recover and prices decline in the 2021-22 season. World production of palm oil has been surprisingly small, not only this year, but also in 2019-20. We have never seen a period of 2 consecutive years of very little growth in palm oil production. Actually, palm oil production in 2 consecutive years, in the 1920 season and in the 2021 season, were down from 2 years earlier. Yeah? Very unusual. For the next 12 months, we consider it likely that there will be a recovery of 4 million tons. This is still comparatively low in relation to what we have seen in the recent years. Whenever we had a setback, production rebounded significantly in the following year. Now, there are reasons behind it. Palm oil has lost its growth dynamics, partly because of lack of replanting and an aging of the trees, partly because of a slowing down in the growth in new plantings, partly because of labor shortage, partly because of management issues. One of the key features is going to be that there is a slowing down of the growth in new plantings. And this is continuing this year again. So in summary, palm oil has lost its growth dynamics. And average annual growth rates over the next 5 and 10 years will be considerably smaller than in the past. And this will change the fundamentals on the global scale. Consumers will become more dependent on other oils and fats. In Malaysia, for example, average palm oil yields have been on a declining trend for more than 10 years. And the average yield we are expecting for 2021 will be the lowest in 20 years. And because of the decline in yields, Malaysian palm oil production in the current year is approximately 4 million tons below its potential. A very critical situation. Labor shortage is one of the issues. Now, the government has announced that 32,000 foreign workers will be allowed to come into Malaysia. This is very unlikely to happen before 2022. And even then, the question is, how much time will it take for all the paperwork involved and to train the new workers before they can start in the plantations and ease the situation. At the moment, 10 to 15% of the production is not harvested but lost in the fields in certain Malaysian plantations. We expect that in the course of 2022, Malaysian palm oil production will recover. We expect for the current season, for the new season, that Malaysian palm oil production will rise by 1.1 million tons, contrary to 2 consecutive years of decline. Indonesian production probably slowing down to a growth of 1.9, and in the rest of the world an increase of 0.9. This brings us to our forecast of close to 80 million tons for palm oil production in the current season, which is 3.9 million tons, up from a year ago. Consumption is likely to pick up, particularly in India, but also in Pakistan, in China, and many other countries. We expect an increase of 2.6 million tons in world consumption of palm oil next season, and still the possibility of a recovery of stocks by about 1 million tons. So also a production surplus in palm oil. For all oils and fats, we expect global production to rise by 7 million tons. This is the highest growth in 4 years, and will facilitate, first of all, a recovery of consumption, which was curbed in 2 consecutive years, and also a recovery of stocks. The growth in consumption is occurring in the edible sector, but it is also occurring in the biofuel sector, with considerable expansion currently anticipated for the US, but also for Brazil, Indonesia, a swing factor to watch. Our summary for all oils and fats, we expect, and this is probably the most important part, we expect ending stocks to rise by 1.5 million tons in the course of the new season. We expect consumption to pick up, but this 2.8% growth is still relatively small as compared to previous years, and it is relatively small as compared to the low basis of comparison. We have seen 2 consecutive years of declining world trade in oils and fats. The past 2 seasons. For 2021-22, we expect world exports to pick up to 98 to 99 million tons. A brief look at biofuels. Edible oil prices skyrocketing to 10-year highs. The premium over energy prices widened to record levels, but still world consumption of vegetable oils for energy still continued to increase. In calendar year 2021, we currently estimate world production of biodiesel and HVO to rise by 1.5 million tons from a year ago to 48 million. Energy prices have rallied lately to a 3-year high. Fossil fuel premiums are still very high. On a world basis, approximately 42.8 million tons of the 17 oils and fats were consumed for biofuels. This is biodiesel and electricity generation. 42.8% or 18% of total world consumption was used for biofuels. 10 years ago it was 20.6 million tons or 12%. The question is this sustainable? And at these high prices, the question is very valid. The market has difficulties to find its equilibrium. Prices are still high currently, and stocks need to be replenished before prices can really move back and move down. So this energy side has to be watched closely. Swing factors to watch, ladies and gentlemen, and price determining factors to watch. First, weather. There is virtually no safety net for any weather-related production losses in the Southern Hemisphere in late 2021 and in early 2022. It's La Nina, and there is a relatively high risk of La Nina resulting in drier than usual conditions in several parts of Brazil and Argentina from October or November until December or January. This should be watched closely because it may affect soybean and corn production. Second, biodiesel. Will the high prices or the new food versus fuel debate result in an adjustment of the current ambitious biodiesel targets in the US, in Indonesia, in Brazil, the EU, and other countries? Will governments decide to temporarily reduce the targets to bring down the food price inflation? Many of them are surprised about the long period of high prices. And the longer the high prices prevail, the higher is, in my opinion, the likelihood that we will see some temporary reductions in biodiesel mandates. We have seen some in Brazil already. In other countries, admixture has also been reduced because of price. But if decisions are being taken in the US to postpone ambitious biodiesel targets next year, or in Indonesia to keep mandates at current levels and not raise them, or to temporarily reduce the mandates, this would have a very important bearish factor for prices. Of course, COVID-19 and the effects of COVID-19. Can COVID-19 be brought under control finally with increased vaccination? We have to watch, and we have to look whether and to what extent for example, Indian consumption will recover. We expect that if our forecasts materialize of declining prices and the COVID can be brought under control, India is one place where we should see consumption to really recover in 2022. Of course, China has to be monitored. China as a big buyer and consumer of oils and fats. Following 2 years of tightness and declining stocks, production of vegetable oils is likely to increase sharply by 8 to 9 million tons. In the new season, we expect stocks to recover and oil prices to decline. This is shown here. The increase in stocks, probably 1.3, 1.5 million tons, probably 2 million tons, depending on the outcome of many uncertainties, but stocks very likely to recover, and prices coming under pressure. In my opinion, soybean meal will have to finance a larger share of the crush margin next year. Here our price forecasts, which we also outlined in more detail in the Oil World Weekly of yesterday. First of all, prices, let us look at the development of daily prices. Prices went down in June, July. They went down prematurely, too early and too far. This was corrected, not only for soya oil and palm oil, also for sunflower oil. This was corrected in July, August and September, and now prices are showing a remarkable strength lately. So the transition from the tight old crop to the new crop is difficult. There is a lot of pent-up demand. Many importing countries have reduced their stocks. Many consumers have reduced their stocks in an effort to cover later at lower prices. So this has created pent-up demand, and at the same time, farmer selling in some of the important producing countries have slowed. Farmer selling has also slowed in Argentina. Argentine farmers, they have largely covered their requirements, their financial requirements for their new crop plantings, and they have now become reserved sellers again because of the devaluation of the domestic currency and the outlook that this devaluation may accelerate in coming months. So they better keep soybeans as a safety net rather than selling it now. So reserve farmer selling has been an issue. We expect some moderate price decline in the next 3 months in the vegetable oils, under the lead of sun oil, followed by palm oil and soya oil, probably by $100 in the next 3 months from current levels. But we see the potential for greater setback in prices in January, June, with an average price for these 6 months of $920 for Albany palm oil for Malaysia, an average price of $1,050 for Argentine soybean oil, and of $1,040 for sun oil FOB Black Sea. With this, ladies and gentlemen, I complete my presentation. I send best regards and hope you have a successful conference. Hoping to see you back again next year in person. Thank you very much.